to today's episode, July 31st, 2024, of Derek Invests. I am your host, Derek Miller, and what we're going to talk about today are earnings. Earnings are coming out today. A lot of companies, loads of them. So I'm going to get through as many as I possibly can in this half hour. We're going to take a look at ARM. If you remember a couple months back, 6 weeks, whatever it was, when ARM was up there at 155. I had a forecast of it going down to 105. It actually fell much lower, ended up hitting about 85 and reversed as we forecast. So I thought that'd be fun to take a look at. Boeing seems like it will be a lot of fun to look at because of the aircraft malfunctions that have gone on, and everybody kind of assuming or not assuming what's going to happen with Boeing. Then we have Meta, Qualcomm, MasterCard, T-Mobile, Moderna, mRNA. Isn't that funny that that is the when all COVID happened and everything, and the stock symbol for Moderna was mRNA, and the so-called technology was mRNA technology. That kind of just blew my mind a little bit the entire time that nobody talked about that. I thought that was quite coincidental. If you believe in coincidences, and if you don't, well. And then we're going to take a look at Exxon. I know Chevron's reporting today too. I just took a look at most of those major gasoline/oil companies last week. So I chose Exxon. Let's get into it. Let's take a look and see what's going on. Let's see what kind of setups we can find. Remember, when we're doing these, this is for education. This is to help you identify these areas. You have to apply proper risk management, proper cash management, and proper investment management to even know if you should be involved in any of these. And then if you are, how much should you be involved? And then how much do you scale into the position? Like, what percentage are you putting in at a time? What percentage are you taking out at a time? These are the things you have to know. You have to build into positions, and you have to build out of positions. Constantly having cash flow and movement, which gives you risk management. That helps with your risk management, and that also allows you to do proper investment management. So you're moving along different investment classes or different investments, period. Whether that's options, whether that's futures, whether that's stocks, whether that's commodities, whether that's crypto. All right. Crypto is something we don't look at a lot, but I'm going to start doing a lot more of crypto. Crypto is a valid asset class at this point, and the footprints of large institutions are all over it. When I say footprints, what do I mean? Well, footprints of large institutions can't be hidden, no matter what anyone tells you. Not over here, not when you're looking at the market in the way we look at it. I don't care what the asset class is. I don't care about shadow this, dark that, blah, blah, blah. You cannot cover institutional footprints. What are institutional footprints? That only way to identify true institutional footprints is trading activity. How do we identify trading activity? Simple: volume. So we're trying to find institutional footprints and then determine whether or not they are accumulating that position, distributing that position, or doing nothing. Have they accumulated? Have they distributed? This will tell us whether or not prices should rise, prices should fall, or perhaps prices will get into a range. Why is all of this important? Well, it's important if you trade futures, so you know if you should be going short or going long. It's important for risk management, so that, again, you know if you should go short or if you should go long, if you should be neutral. If you're really getting advanced, you realize that you may want to go short and long at the exact same time in different percentages. You can do that via futures. You can do that via options. You can do that by buying a position. Maybe you buy an index like the NASDAQ. Maybe you buy a stock like Meta, and then you use a triple short to cover a short-term position, a triple short ETF or something. There's a lot of ways you can do these things. I explain this and I go through this in my mentorship program, which I will be starting up in 2.5 weeks. I will be starting that up. I'm not going to get into details now. What I can tell you is I cover all of this. We do this. I do not allow, and I will not be having more than 10 students in the mentorship. Traditionally, I will try to keep it at 5. This is for people that are very serious about what they're doing. They're serious about gaining knowledge. It doesn't mean they want to become a trader. It doesn't mean they want to do their own investments, although it may, and for most it does. Many RIAs do this. They're already professionals. They just want to get better at the investment management. They want to learn how to work with their clients better. I have 25 years in this, so I'll get a lot of that. I'll get a lot of people that are actually traders, so professional traders and have been for a long time and just want to hone their craft a little bit. Perhaps they're using moving averages. They're using different indicators. They're using Fibonacci. They're using things like this. But every time a trend turns or a market turns, they feel that they're unprepared. And what they want to do is they want to learn how to identify areas of trend changes. And that is exactly what they'll learn. And that's one piece of what they'll learn in the mentorship. That's enough details about the mentorship. I'll talk a lot more about that in the coming week. But for now, let's get into it. We're going to start with ARM, Boeing, and eBay. Let's go ahead and share that screen. I'm interested to take a look at ARM. I haven't looked at it. It hasn't been of a lot of interest for me because I had the forecast, the major move that I saw coming. I had already forecast accurately, so I haven't really looked at it since. Let's take a look and see what we think. Well, that's fun, huh? Let's go to weekly. ARM has to be done on a daily because weekly there's just not enough information. It just hasn't existed long enough. There we go. Interestingly enough, what you'll notice is what we were just discussing on price. When it was up here at the 150 range, I forecast that we were going to come down to about 105. And as you can see, it came much lower. And now it's since rallied. Let's see. It's interesting to note that it did. It effectively filled that gap. This is close enough. Let's take a look at what it's doing now. We're going to move into a 4-hour chart. Okay, roll back in and filled. As you can see right here, what was this, folks? Was this buying or selling? If we're taking a look and we're trying to evaluate this position, what we want to know, this is obviously an enormous institutional footprint. And what we want to know here was, were they buying or selling? I think it is fairly obvious that they were selling. Wow. So how can that be, right? So because price went from $95 up to $160. Well, the way that you could identify that they were actually selling, first off, it's very easy to see that. You pushed price from 75 to 150 on major volume, major activity, on very large price moves. The price move is indicated by the size of the bar, okay? The size of this bar is all price. When you have enormous price moves quickly and on enormous volume, if it's up, that is traditionally to bait retail, less knowledgeable traders into buying that position. If that were to happen on the downside, so as price fell, that is traditionally used to institute fear so that you can buy more. So this was easy to see that it was selling for me, which is why my forecast called for a price drop to 105, which it obviously got exceeded, which is great for all of my students. They made additional money, or they were scaling out and they were out at 100, that was the intelligent way to play it. Let's take a look at now. Do we see anything now that looks like this? No, obviously we do not. But do we see anything that looks like institutional hands at play? Well, let's evaluate the volume. What would you say average notional volume on this particular stock is? I'd probably put it right there. Is there anything poking out at you? Well, there's something here, which is at what? Just about that 155 mark. Is there some back here, 55 mark? I would say that this right here, this volume down here, this trading activity is what led to that price rise. As the price was reaching new highs, volume was drying up. All of a sudden, you don't see any institutional footprints, right? Now, as price is falling, do we see that price being caught? Does it look like that price is being caught? Maybe right here. Beyond that, I don't see anything. Let's zoom in a little further. Okay, so here's that volume. As you zoom in, every chart is a new chart, but as we zoom in, things are going to start to stand out. That volume, look at it look at the way it stands out. Look at the way it stands out here now. Now this looks more substantial, but on this chart, let's see. This chart gaps, meaning down. When there's a hole in the chart and price gaps down, those gaps tend to fill. So price tends to reverse back into that area. Right now, what do we see? Well, this is interesting enough that price has chosen to gap up this morning. I would say, let's zoom in. It looks like it will fill that gap to the downside, but let's really zoom in and have a good look here. So it's up 6%. It doesn't look like it's going to have a lot of legs. There are a couple of gaps up here. There's a gap here. The gap is effectively filled here. See, that gap's filled. This one has not yet been. However, there doesn't appear to be a lot of strength here. It's gapped up 15. Yeah, that looks effectively filled, really. Let's come down. What you would look to see, by the way, is you would look to see large volume at these lower prices, which we do see on the 5-minute chart. But this is that buy the dip mentality. This is people that don't know when they should buy and when they shouldn't. The proof there is that you're at 140. They might just be scaling in 134, 132. Now price is gapped up. So in the next week on ARM, we should see $134, 7/31, 2024. ARM 134. Let's go ahead. It's summertime, remember, everybody. So we have to be a bit more cautious with timelines. I cannot wait till we head back into fall so that we get back into typical normal trading activity. In normal trading activity, this would take about 3 trading days. Oh, we have to, let's make sure that we're putting target date. All right, beautiful. Yeah, so if you're on a 5-minute chart, traditionally, you're only looking at a few days. You're looking at 3 trading days, but we are in summer. We are in the summer lull, so to speak, and we still are. Although I think it is fair to note that we have had a massive increase in volume with our most recent price drop in the market, which I will review tomorrow morning, because we need to evaluate if it's over. As I said last week, we're going to look at Boeing now. As I said last week, if you remember, it was Saturday. I said that prices should fall further than the close of Friday. So the close of last Friday, prices should fall further. And I think what we were looking at was 54. Is that what we were looking at? Let me go to a daily real quick. I just don't want to misquote on the QQQ. Yeah, we were looking at about 54. What did we hit yesterday? We came darn close. I think we were 56. No, low 54. there's a very, very strong chance yesterday was it. I'll review that tomorrow. But yeah, it looks like we hit the marker yesterday. So that may be it. I'm going to do an analysis tomorrow on whether the stock market is now a place that is a buy, and when you should buy for the run up. There was no significant action that would lead me to believe we were heading into any sort of major correction or any deep correction. Although I think it's fair to note that we almost were down 10% on the NASDAQ. But I didn't see anything that told me we were heading into any dangerous territory. I'll do a reevaluation tomorrow for you. For now, we're into Boeing. We're going to zoom in a little bit in 2020, don't we? Let's zoom in because we've been trading in a range. Here we are. So here's 2020. We're trading in this range. We're going to have to zoom in a little bit. I do see something of interest. That's a weekly gap on a chart, folks. Weekly gaps on charts. Let's take a look at Boeing. Gaps fill on Boeing. Now, a gap on a weekly chart, you have to remember, the further you get away from the gap, right? It's like driving down the highway. The further you get from the exit you were supposed to get off of, the quicker you will have to drive to get back there. So this particular exit, this particular gap is way up here at 240. We're down at 188. When this does reverse to the upside to fill that gap, it is going to do so in a very speedy fashion. It will get there quickly because it has gotten so far away from it. There it is on the daily chart, right up there, 243. Call it 242, whatever. Here's volume on the way down. Now, where's this volume at, everybody? This is that buy the dip mentality. Somebody didn't realize that when you gap down on volume like that, you have to watch it play out. Now, what you want to see is you want to see a fall. Once it reaches its low, you'll see some volume. And when it revisits, what you want to see is volume continually declining. Volume is continually declining. Why do we want to see that? Well, this is definitely an institutional footprint. Here, let's highlight that area. This is definitely an institutional footprint. There's no doubt about it. Only one group can do that, and that is institutional money. Those are without question standout areas of trading activity. I would say that your average volume on this chart is probably about there. So that's very, very standout. Let's zoom in a little bit here. All right, 4 hours. Here we go. Was there anything stand out here just in the background? Now, what this tells you is this was selling, right? So let's zoom in a bit more. Remember, every chart is a new chart. What looks like standout volume here or doesn't look like standout volume here as we zoom in could become that. Is there any standout volume here? Yeah, there's one here, all right, which gave a very large price move up to 187. Now, this is a large price move due to the size of the bar on large trading activity. And what followed that was another price move up. This was a sell-off. Okay, this looks like a stock being accumulated. Why? Because they're using their big pockets, which is lots of trading activity, lots of volume, to lift price to then let it drop. Lift price to then let it drop. But it doesn't drop very far, does it? It has not come down and reached those lows of 172. This is an effort to purchase more of this position. So let's zoom in a bit more. 30 minutes, 192. Now it's reversing. Of course it is, because it's had a hard time breaking through there. Let's zoom in on a 15-minute on Boeing. All right, this is that. Well, sadly, it looks like Boeing's going to have to come back down into the 178, which is what, a 6% price drop from here. That's what it looks like. This was a move being put on. It looks like it failed. Maybe not enough energy there. Truth be told, Boeing is not interesting enough to put a price target on. So we're going to move on. But it does look like Boeing's going to have to drop another 6% and try to build up a little more energy before it gets its move. It does look like it's being accumulated. It does look like Boeing is poised for a move back up. Let's see. What did I say the number was? 242? Yeah, I mean, you could put a year-end target on this. The year-end target here on Boeing at 242. 7/31, 2024. I mean, this is a definitive move coming. I have no issue making this. I know a lot of people that follow like to see immediate results because the point and the reason I do these is to educate you, but also to show a level of accuracy, target date, and also to show the methodology. This is not something I just make up and pick at random. I do the same things over and over and over, and that is because they work. They will continue to work, and regardless of all of the talk of AI trading or algorithmic trading, they are easily beaten because they are easily identified, and all of that machine learning, AI learning, algorithmic trading, they follow all of the same rules that are easily defined and rules that are easily played against. It's like if you're playing chess with someone and you know what they're going to do next, just all of the time. All right, we're going to move through some stocks real quick now. eBay, Meta, MasterCard. The reason we're going to move real quick is I'm running out of time. eBay, Meta, MasterCard. So we're just going to go for things that look like they have a setup, okay? eBay. Is there a setup here? Doesn't appear so. I'm going to zoom into the daily now. I'll show you how quickly I'll look. Okay, so eBay does have a setup. Anybody that thinks it's not going to return to this price is out of their mind. You should build to this. All right. $7/31, 2024. eBay. Whoop. We're gonna call it 45. Target date. I don't think I actually put the proper target date on the last one. Maybe I did. I don't remember. I'm just trying to move quick now. All right, there's eBay. I didn't need to zoom in on that one because it does have a target that will be hit. Let's do that one more time. Meta. Here we go. I want to zoom in. I want to zoom out on Meta. Meta got a lot of hype because they started talking about AI, just talking about it. That's all it takes nowadays to get a nice big price moving or position. And this is where they started talking about AI down at 100. Now you're sitting at 472. Do you think that's healthy? Who thinks that's healthy? Who thinks that makes actual sense? That has worked within a stock market before. This is a price. This is a gap down, right? And then this is a purchase. Who did this? That's definitely institutional footprint. So they're buying or selling. My guess is they're selling. because this was selling. I know it doesn't look like it. It is. Gap filled. This gap is effectively filled, though. 7. Nothing beautiful about Meta. Let's move on. MasterCard, Qualcomm. MasterCard. Let's go back to a daily. Oh my. Yeah, that's selling. So it will return. It will return back to here, 450 for sure before it does anything. Qualcomm. I'm just gonna see if I can find something that has a nice, big, giant near-term target for you. Okay, fill the gap. Look at that. There's a gap, everybody. Check this out. This is what I try to show you. Qualcomm. Now, did it matter if you right here were waiting for this gap to fill through all of this? Not at all. Why? Because it's still filled. Now you can be an actual buyer. Look at this. Qualcomm is a great one. See this? That, my friends, is institutional footprints at a very high price, which is why price has fallen as far as it has. This was institutions getting you excited, getting retail excited. Maybe, I'm sure you're not all retail watching, but this got retail excited. They gapped it up in price through a previous high, which is always a gap that fills 100% of the time. Okay. The problem is if you don't have proper risk management, if you don't have proper cash management, you will start building a short perhaps the wrong way starting here. And you probably bail out. And then right here, where institutions then sell off yet again and price falls, you've already sold. Now, where do they start buying again? Right here, here, and here. This looks like a lot of purchasing. I would say this is a rally cry to the upside. I'm going to move really fast into the 45-minute. Yeah, this will be at 210 by year end. I would say, I don't know. 200. Let's more. Let's try to get a little closer for you. 30. Yeah, you should come 200. Let's see, 15. Oh yeah, buy. So this will be your first stop where you'll get a little bit of a reversal. Yeah, okay, that's fine. Let's go to 5-minute. We have a very large gap now on very high volume. So it's interesting because you have above you on the 15-minute $200 and you have below you 167. This is one of those times where if you understood proper risk management and proper investment management, you would do both of these simultaneously, right? You should play this to the upside and you should also play this to the downside at the exact same time. That is what my mentorship program will teach you how to do. Your risk reward is clearly to the upside, very clearly to the upside. However, you have 7-8% below you. What do you do about that? Well, you'll have to join my mentorship program to find out. That's easily done, and it actually provides additional profits that I love. All right, everybody. Remember, if you're not good up here, you're not good anywhere. Get outside, take a walk, fake it, smile, fake it till you make it. Remember, every day above ground is a good day.